We got some reasonably decent economic data this afternoon. Trade balance, optimism index. So keep your eye on the clock in the afternoon. Reasonably decent dollar trying to hold up. So you can see the anticipated impact is not like yesterday. There's no full bar, right? These are the shaded anticipated impact measures. Bloomberg's 5 things you need to know. They're still pushing the idea of a 50-point basis rate hike. It's really an unrealistic uh, perspective, but that's what the market's pricing in. The good thing, if you want to see it as a good thing, is that in March, if they come out and they don't bump a 50 point, the market should really like that. Um, could get a nice catalyst move out of such a thing. But in the meantime, while they're still looking at such an aggressive move from the Fed, pricing that in, we're going to continue to see this volatility. As we're going to look, metals are moving, and for the overnight hours around the world, markets were kind of mixed. There is going to be hearings on coins today, and then there's additional auctions. So come over to Thinkorswim, take a look at the Market Watch tab. Go to Calendar, turn everything off, just have the Econo Day showing. 8:30, 8:55, 11 and 1. Yesterday was a really great example of an additional auction impacting our market. Doesn't always happen, right? We'll have these expectations that we're going to see some reaction, and then there is no reaction, right? But yesterday was kind of a classic, perfect example of why we look at these, and you don't want to let them slip by, right? Give them the opportunity to move the market. And if nothing happens within a few minutes, you know it's not going to, and then you can do what you want to do. All right, for today, we're challenging the low of yesterday. Should we break down through that, we'll go down and challenge the low of last week. Not much stopping us from that perspective. So that low needs to hold, or the target will be 44.40. Right, that'll be our first stop. We're only down a quarter, so it's basically negligible. You could say we're flat on the morning from say our current location to the next low. Is not even 1%. Right, so with an ADR better than 2%, the S&P could easily make that move, and it wouldn't even be considered extreme. Right, it would just be like, yeah, another day in the market. So we'll look to challenge that low, and then that would possibly start to put us back into the box that we had a while back here. Should the news be positive, we happen to make it back up through the Globex high. We'll challenge yesterday's institutional pivot points. Then we'll focus on Friday's high. These afternoons are getting to be more and more normal. I would guess that's the word for it. With these extreme moves in the afternoon, either direction, kind of a coin toss of where we think it's going to go. And yet, when it starts to unfold, we've been using market breadth, um, advancing declining issues, cumulative tick, and just kind of spreading the perspective out amongst those. And the bonds close at 3, the dollar closes at 3, and that can often be a little bit of a heads up too. So, when it gets into power hour, there's a reason that a lot of experienced traders kind of call it quits before we get into power hour, because these crazy market conditions are nothing compared to what it could be. Um, there's been periods in time like in 2021, 2020, where they removed lock limits and let the market run as far as it could. And the institutions would come in with MOC orders and slam these markets at an exaggerated pace. And there was nothing stopping it. It would go 8, 10, 12, 15% in an afternoon. It's happened before. It'll happen again. It couldn't happen right now. They have lock limits on. We would stop at like 7.5%. But they use that power hour for a lot of different things. It's a good habit to get into, just to not trade in that area and instead use it to maybe exit the area. I know these moves look really profitable, but they're also really dangerous. Just kind of got to ask, is it worth the risk? All right, we got the same pattern, same setup on the NASDAQ, except we've already broke that low. So if we don't get back above it within the next one or two candles, it's very likely we're going to continue that downward move. There's two pivot points: the intraday low of Friday, and then just Friday's low, which happens to cover that Globex as well. My money would be on the lower one. If we do start breaking south, then that would be the target. There is a roundie in between both of those, but I don't think it's got enough to hold it. A positive move, on the other hand, bringing us back up through our own Globex high, would have us re-challenge these pivot points from yesterday and perhaps adjust the top of this box. I find that to be a very unlikely situation unless some kind of news comes out that changes the game. More than likely, we're going to hold the range in between Friday's low and Monday and Friday's high. Right? That would be the most likely scenario, is that we just sit here holding, because we still got a lot of economics on the table for the week. And yeah, they're still trying to price this in. So that would be the most likely scenario. All right, so you can see the dollar is starting to move around a little bit. Yesterday, it stayed pretty well contained and it started making some big moves in the overnight hours. Then that got shut down and it's back inside that range. So I want to keep our eye on the dollar and see if it's going to make it back out of this range. Try to look around for any kind of news on the dollar that you have some validity to. For an example, going to TD Ameritrade's website, reading any publications on the ticker tape about the dollar, or Bloomberg, Wall Street Journal, any place that will define what's happening in the dollar right now. It would give you a much better perspective of what to expect out of the dollar and then what to expect out of the market. The bonds did really good yesterday, but this move late last night kind of starts to shake things loose. This is kind of why it matters. You start to go out to the higher time frame. This is a critical level, and we broke it um, the other day. So between Friday and yesterday was supposed to be the recovery day to bring us back inside the box. No recovery day. We're still continuing that move to the downside. That was the 10-year. This is the 30. This is the one that I normally watch. And we're breaking that level today, right now. We don't have candle close yet because the day's still open. But we are we're right there on the cusp of something getting really, really bad, right? So keep your eye on the bonds today, guys. If we break this low in the intraday, I mean, it's bad enough that we broke through this thing in the overnight hours, but if we break that Globex low in the intraday today, we're going to see a market really start to get violent. You ain't seen nothing yet, right? How's that for a phrase? Hold my beer and watch this. That's what the market's going to say. We break that low. The Russell and the Dow are decoupled from the S&P and the Nasdaq this morning. You can see these two very similar patterns and these two very similar patterns. Think about what they represent when you're going in and looking at these markets. Think of the Dow like your blue chip mega cap, uh, gold star, gold ribbon companies, blue ribbons, and the Russell is small caps, right? You kind of put them in those two contexts. S&P like a general marketplace, and the Nasdaq with the tech marketplace. When you put them in that perspective, they have a little more connotation to what it is that you're looking at on the day, what the expectations are, and why these may be moving similarly. The dollar and the VIX are still disconnected, which is good. That means we're not seeing global risk piling into the dollar. Keep your eye for any kind of synchronization between these two. We don't want their charts to start to look similar, to show similar patterns, similar setups, similar breaks. The other day, we were seeing the dollar and the bonds moving in the same direction. It is possible. It's just not normal, right? So we want to recognize when we have those unnormal or unusual situations. Tasty Trades did a lot of research and has, oh man, a number of videos that go into the research they did between the bonds and what they just called stocks and bonds, right? They didn't say the ES versus the 30-year, but they just made the videos with titles like stocks versus bonds or correlation of stocks and bonds. If you were to go to YouTube and watch those videos, you'd have a much better understanding of the nature and the relationship of these two products and kind of what it means when they start to sync up together. Got an email yesterday from Trendspider with, well, I don't, maybe it come faster than yesterday, but I saw it yesterday about a new tool they added to the Trendspider. And I've had Trendspider for a couple of years, and they've continued to improve it, which I think is cool. But this is kind of a game changer, especially if you've been spending money on things like Cheddar Flow and black box stocks. They have unusual options activity built into this. No coding required. I totally love that. So it already has the pre-built settings. It's looking for BB and AA, and anybody who's been a coaching client of mine knows what that is. Hitting above the bid and or above the ask, below the bid with size. So it already has size put in it, right? It has everything pre-configured, ready to go. And from what I heard, I haven't been able to go in and use it yet because the market's not open yet. That you can adjust your expiration dates. This is really great because if we're looking for aggressive short duration big traders, they're not going to go out January 2024, right? I don't need to see options from next year. I want to see options in the next 5 series, right? The next 5 weeks or even less. I don't need strikes that are all the way out of the money in those really, really low sections that those just aren't worth looking at, right? Those aren't the ones that the institutions are going to hammer down on. So you can adjust your strikes, weed out what you don't want to see, adjust your dates, weed out what you don't want to see. This is kind of a game changer. And it may be a reason for me to start looking a little bit more at Trendspider during the day. I did post a video on this. It's in the large caps channel of the Bullish Bears Discord. So you could take a picture of the YouTube video that they made. I think it's like 13 minutes long that goes into that. Pretty good deal. So I don't know. We're going to dig a little deeper into that. See what we can do with it. Probably tomorrow. I got a pretty full day today, but I think that's a game changer. All right, the sectors this morning, you see we got a lot of them in red: USO, XOP, silver, cloud computing, energy, and just like yesterday, I mean, energy was a great play yesterday. Yesterday, energy started off down and came back with a vengeance. Some great opportunities. So, don't rule it out. Looking at things that are up, not a whole lot, right? Finance is moving around a little bit. So when we talk finance or energy, or pick your sector, there's always subsectors that really matter, right? So you want to break it down and look at it on a different scale, not just, oh, well, the finance is moving. What kind of finance? Diversified banks, consumer finance, asset management. What kind of finance is moving? It's the same thing with energy, or technology, healthcare. Everything can be broken down into a smaller subsection to get a better idea of what's making moves on the day, right? And these pre-market morning briefings kind of designed to get us pointed in the right direction of what should we be looking at this morning. We don't want a watch list going into the open of like 15, 20 names. It's just too many names, right? Unless you're running like an alpha protocol, then you're just not going to want to do that, right? And we're definitely not in a market to be running any kind of protocol plays like that. So those don't fit. You want to go in and be really selective on the names that you have on the list. Think of it like a big funnel, and you start out with like 100 names. You funnel those names down to 3 or 4 really good names as you come into the open, right? And then after 10, 15, 10, 20, you go back and reset the process and look for the afternoon plays, because once we come on the other side of that lunch, it's going to be like having a whole new day to start all over again. And you want to go into the afternoon with yet again another 2 or 3, maybe 4 names on watch. So on days like this where we can't use the sectors, they're not really providing us any guidance on names that we might want to focus on. Then we got to go in and start using our own scanners and be more specific as stock selectors. And the way I do that is just run it through liquidity first. These are the most heavily traded options companies for January. I get this from the CBOE, weed it down to around 100 names or so. And then from that, looking to see, well, what is up this morning and by how much. My criteria to be, quote, up this morning is at least 0.5%. Not very many names in there, and they're almost all finance, right? So if we get finance out of the way, then there's really nothing else in there. When we look at it from that point of view, we want to be able to ask the question, how many names are up this morning versus how many names are down this morning, and by how much? We're in this, quote, sideways market this morning, this wait and see marketplace. So is it really a wait and see market, or are we tilting in one direction already? So here's the S&P, 0.5%. There's hardly any names in this list. We come in and ask, well, how many are down 0.5%? 15 names. So it's still not a whole lot of names, but a lot more than are up 0.5% this morning. All right, and we want to look at the names that are in this list, not just, oh, there's 15 names. What do they represent? Chip, energy, finance, technology, and then kind of follow that back to look for our opportunity. Between finance and energy, I really don't think I'm going to have any more room left to have anything else to pay attention to. Those two are going to be my number one focus today. Um, For finance, it's going to see if this can continue the rally or if it's just going to dump and flip over. That'll be a nice play to kind of finish the week. And then for energy, to see if we can come up off of these lows again. So this is the S&P 500. We don't want 500 names. We want to get that down to around 100 names. It's kind of hard to hit. So 90 is close enough. Pre-market change percent. We've got a lot of gray, and that's because this map doesn't respond to color until we've gone at least a half of a percent. So you can see that Visa's down 0.4%, but that's not enough to make the color change. Well, it's an easy fix. Just hit the button here, change your multiplier to a decimal point, and now it'll start responding quicker to a market change. It's just a visual, right? It doesn't change the names that we see, just how we see them. So, finance is kind of sticking out really good, and that's really, I mean, transportation is not far behind it, uh, and some consumer names, right? That's that's a small list. So we take it over and look at the same thing on the Nasdaq. Now the Nasdaq 100 doesn't need a filter; it's already 100 names. Just swap it over to pre-market change, adjust the color scheme to respond sooner, and there's the Nasdaq in all of its glory. Maybe a little bit of retail trade, and that's one tiny little portion of the Nasdaq. Certainly not enough to get us there, right? And that's it, guys. You're gonna have to run your scanners. That high-low graph is what I've been using on the intraday. No adjustments required. I did a video explaining how to set that thing up. I bumped mine back from a 90 to an 80. That way, the names that show up in that list aren't already pegging out at a 90%, right? If we're trying to find names on that list that are like, you know, breaking to new highs on the day, um, you know, breaking an intraday range, I want to catch them before they make the break, right? So I want to catch them before they're hitting 90. I want them in the 80s. It does make the list a little bit longer, but if you've been using that high-low list for a while now, you'll notice that some of the names on that list are on there all day long. So you just kind of visually weed those out, right? You're looking for like new names to show up on the list. Um, I don't know. Most of the time, I don't just adjust it; just leave it the way it is. But I've been running it on that 80, and I really seem to like it. So, if it's a day like this and we can't lean on the sectors, we got to be stock pickers. Once the day is open and you've gone through your morning with the 3 or 4 names off the list, then that can be your backup for finding new names to trade. All right, guys, be careful, be safe, and I will see you all tomorrow.